CEO and CIO of Ark Invest, OpenAI is now the third largest position in the Ark Venture Fund. Cathie, it's great to have you on. Welcome.
Thank you, Morgan. Happy to be here. Happy to see you.
So I want to start right there because this was a record fundraising round. We know there was a lot attached to this fundraising round, including a promise of a conversion to a for-profit entity. Why did you feel it was compelling to invest now and at this valuation?
Well, we've been doing work on AI for 10 years, and we've been waiting for the companies that were really that Nvidia was going to hand the baton to. Not that Nvidia's story is over at all, but as you know, Nvidia has basically been communicating, and investors have been buying a very big idea. And for Nvidia to continue to work, we think there are going to be other winners. We think that the foundation model players are going to be very big winners, $15 to $20 trillion in market cap in the next 5 to 10 years. We put out a piece in our Sunday newsletter you can find on ark-invest.com, and we're going to put out a lot more on this. So OpenAI leading the charge, really, Anthropic, XAI, so Elon Musk and team, and even Elon, I think, is saying those three, and Google with Gemini are the big four. And, you know, unlike the railroad era, and many people are comparing this to the railroad era, I think that the four winners are showing themselves very quickly. Whereas in the railroad era, which, by the way, accounted for 63% of the stock market in its heyday in the early 1900s, unlike the railroads, there were hundreds. I think there were hundreds. We can focus on the big winners. This space is moving so quickly and is going to become so big because it's effectively substituting software for labor. Not that this is going to kill jobs at all. It's going to make people much more productive. And they're already seeing it with ChatGPT just as a starter.
And of course, the four companies you just mentioned are all companies that you are invested in through your funds. I mean, you mentioned XAI. It's been interesting because Elon Musk, co-founder of OpenAI, has been very vocal, very critical of where OpenAI is headed and the direction in which Sam Altman is taking it. Do you disagree?
I think what he's talking about is more about the history of the company, and we're looking at the future. And I was happy to hear that he did mention, of course, OpenAI as one of the leaders. Of course it is. So, you know, we're just looking to the future. I know there's a history there, and, you know, what's done is done. And we're just looking forward, trying to figure out who are going to be the big winners in this space.
Cathie, I want to look back at the Innovation Fund for a moment. Over some periods of time, see the S&P is up 34% over a year, beating Ark Innovation by 14 points, 94% over 5 years, beating that fund by 84 points, 191% over 10 years. That's for the S&P, beating the Innovation Fund by 64 points, pretty much since inception. What do you say to investors who look at that performance and doubt that you're making the right calls?
Yes, I would say, first of all, our compound annual rate of return since inception has been nearly 10%. We went through a boom in 2020 during COVID, where we were up 360%. And we had valuation and interest rates and concentration in the markets working against us. We are a diversified exposure to innovation, truly disruptive innovation. I would focus people on the fact, and looking at your chart there, that if you take away that boom and bust, what we have now is three forces working for us and a long base. Again, you take away, you can say we have a base after that period. You can look since 2018, we've been basing. And I remember saying this with Tesla at the time. The longer the base, the bigger the breakout. And we certainly were right there. The three forces that I think are going to become tailwinds now, they have been headwinds. Interest rates, they're coming down. And I think despite what we saw in the employment report today, I do think that they will come down more than people think during the months ahead. The second is the concentration in the market towards the Mag 6. That is starting to dissipate, and I think that will work in our favor. And then the third is valuation. During August, when the market got hit, our valuation, as measured by enterprise value to EBITDA, dropped to nearly a market multiple. We were basically sitting on a market multiple at 21 times EBITDA, enterprise value relative to EBITDA. Now, we do adjust it for stock-based compensation, which is really important when it comes to innovation, alignment with shareholders, as well as normalize R&D. But that valuation typically is twice the market's, and we hit the market. So now I'm looking at what were headwinds turning around and becoming tailwinds.